Welcome back, everyone. It's Jason with your Hopium Free Crypto channel. Well, we're here live because Bitcoin's obviously crashing. We've gone under 30,000 US dollars, and it looks like we are just holding up. Maybe we're too premature. That's probably the problem for a lot of us here. But if we look closer and we take some time and some patience, maybe we will just get there. We are looking for a price of 28,600. So we're about $1,000 off the major low at the moment. So we've got a few hundred people here already. Make sure you've hit the like button, push this thing in the algorithm, and let's check out some other cryptocurrencies, whatever else is dropping. Thanks everyone who's joining from anywhere around the world. I see a lot of you guys from the UK, 4:30 a.m. For us, I was praying for a nice late Bitcoin crash. It was looking like it was going to come last night, but didn't happen. Fortunately, it is now a beautiful 1:30 p.m. in the afternoon here, and we could go all day if we wanted to, but ideally, it would be nice to get outside into this beautiful winter sunlight. So let's hope the Bitcoin crashes nice and hard, super quick. We dollar cost average in, we buy our Bitcoin, and then we get on with the rest of the day. Up the road in Brizzy, Sydney. Anyone from the US still up? It's not that late, is it? No. Well, I mean, it's getting closer to midnight for some of the East Coast. Bangkok, excellent. Questions about buying. So if you've been following, I've put out a couple of videos or several videos lately. Fear and Greed Plan, improvisation, I think someone had here. The super cycle's taken an interesting turn. I agree. I don't know. I like it. I was never one for a super cycle. I said that from the very beginning. I thought it was a great term to use in titles and SEO. It just sounds great. A super cycle is coming. Let's all get sucked into a super cycle. You know what it was last bull market, 2017? It was an S curve. An S curve was the big news, meaning the market would never go down again. Let me see if I can do it from your view. I got to go this way across. No, this way. Uh, S curve, start down, you rise up really fast, and then you go sideways, and then you go up again. That was what was trying to keep people in the market. It was saying that, well, Bitcoin's up now, it's never going down, but we have some time to cool off. It might go sideways. This whole super cycle thing is the exact same thing. It's BS. Who came up with it? It's BS. I'm just having a real like dig here because that essentially sort of gets you into this mindset that you could hold on. It's the same thing as saying um, a $300,000 Bitcoin by September, or an 80. Someone posted on Twitter today an $85,000 Ethereum by whatever date. Like it's absolute nonsense, ridiculousness. It does get the clicks. It does bring the new people in with lots of hope. And you know what we're about here? We're not about the hopium. So at the moment, we're down about 28%, which is what I had on the thumbnail. 28% from the peak that we had back in June. Let's get that date. Yeah, it was around the 15th or so of June. We peaked out at about 41,300. So we're a good 28% down from that point. That was my tweet. So BitBoy put out a post saying, oh, Bitcoin's the strongest. It's just absolute wanky bullshit BS. I don't want to get demonetized here. But in Australia, that wouldn't be demonetizing. Anyway, absolute BS posts about Bitcoin all rally around this thing. It's amazing. And I just put a little tweet saying, this is, you've jinxed the market. We're going down from this point. I held myself on that. So if YouTube comes after me and demonetizes stuff, we have to replay that. Thank you for the super chats. You guys don't have to super chat anything. If I get to the comments, we get to the comments. Otherwise, just enjoy the ride. Zia says, it's my friend here, Zia. I hope this is the capitulation we need. It's holding at 29,500 from LA. Thanks, Zia. I would have to say that is true. I personally jinxed it. I'll leave this one up. Subscribe to comment live. If you guys haven't already, make sure you've hit subscribe so that you can comment in the feed here. It's another little metric that, well, it's another feature that I can put in using YouTube so that we can hopefully keep some of the scammers out, keep those scammers away, posting about all their hex and whatever other thing they're going on about. Dump already stopped. Quite possibly, hey? We're all getting premature on this one. Poor people in Sydney. Nearly going to use the B word there. Everyone's locked down in Sydney. Where else are you locked down? All the government FUD. I mean, I look. Government FUD is going to be government FUD. We'll get that in the bear market. We'll get that in the bull market. Probably they'll keep coming up with more stuff around regulation, regulating stable coins. I was watching something on that this morning. So if we get that, then that'll really scare the market, because I guess a lot of people see the market being held up by stable coins. That is really where we trade in and out of. We don't necessarily go cryptocurrency to fiat all the time. So stable coins are a pretty big one. Am I the savior of the market? Definitely not. Definitely not. I am not any sort of savior for this thing. All right, let's have a little flick over to the chart. Bitcoin. Bitcoin. So who is still buying altcoins in this sort of market? I posted that just no, not that far. Come on. I posted that on Twitter just before. If you aren't following on Twitter, make sure you're following. Make sure you've liked the video up. Helps us out in the YouTube algorithm. And you subscribe so that you can comment in the side here. Okay. You guys are buying. What are you buying in this market? I don't understand why people are buying altcoins. And it was the poll I did was about 60% of people were buying altcoins, 40% weren't. We have been on a solid downtrend since these tops. This was pretty much the peak of altcoins. There's the peak. And then altcoins have basically been down. Some of the minor exceptions, but even still. So we peaked in May for, this is Cardano Bitcoin, and now we're down. I have mentioned that I was or am buying some, well, Ethereum, but I've still been holding off on that. The altcoins, stablecoins, and ETH, but even ETH, you know. And again, I guess I don't really consider Ethereum an altcoin anymore. That's probably why I wasn't thinking of it. But anything else, I would just be staying the hell away from. So that's not too bad. Ethereum and ADA, so ETH and ADA are about 30% down on their BTC values, which of course puts them a lot further down on their US dollar value. We are down about 60% in the dollar sense. ADA. But a lot of these other coins, which are still being touted and talked up about buying the dip. Link was another one. I have not been buying Link. Nothing against any of these projects. So if you come in late, nothing against the projects. You just have to look at the chart. Link USD has just been down, down, down. Link ETH has been down, 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 down. Even this bull market, this was the kind of the start of everyone coming into it in December, January. There's January. There's the peak of it. Oh, there's the peak of it actually. May, it was down. So Link didn't do anything in this bull market. It's just been down the whole time. Link BTC has been down as well. January, we got a little run up against Bitcoin because, why not? It's a bull market. But then from May, those tops in May, it's just been down, down, down. And I said I would probably be selling out of some of my Link if we started to break down from here. And we have. The downside to that, well, the risk is that we only break this line a little bit and then come back above, right? So it has broken it before and then bounced back above, broken it through this section here, then come back above, broken it here, come back above. But each time it got a new high, new highs, well, but it didn't break down underneath. It broke down, but then got a new high. Broke down, semi sort of high. Broke down, new high, and we had a new high. But this time we bounced off it and we didn't get a new high. And now we're back underneath. So if Bitcoin regains strength, I would assume that Link will continue further down. So it's nothing against the project. It's just, where is my money going to be better suited? And right now, I don't think it's going to be in altcoins. And this goes, I was creating a video actually before this whole market went absolutely nuts. I was creating a video on the problems or the stuff that we can see when it comes to the second stage of a bull market. And cryptos that have already been out generally do not regain their Bitcoin value. So I was in the middle of creating this video. I'll create this and put it out tomorrow instead. But you've got the high in June of 2017 and then the next high. So this is ETH versus Bitcoin. Ethereum did not recover to its same high that it did during the first stage of the 2017 bull market. And we're seeing that again now. So if this happens to be the major high that we get for Ethereum, this is probably one of my only bets that I think will go higher, because I think Ethereum is going to overtake Bitcoin at some point next year, 5 years, 10 years. I don't know. But that's the one bet I've got. But stuff, oh, sorry, you probably can't see that. Let's go. Ethereum. ETH. All right. So that's the bull market high. That's the secondary high, but it went higher on its USD value, but it doesn't matter because it lost value to Bitcoin, and Bitcoin was the better return during the second stage of the 2017 bull market. Now we're seeing the first stage of the, call it the 2021 bull market. We want to get above this high to break this pattern of lower highs. I have a bet on Ethereum that it should, but pretty much every other cryptocurrency cannot do it. There is an exception, and the exception, strangely enough, has been Dogecoin. This was its mid-cycle top. It broke lower, and then it never got there again for the rest of that period. But then Dogecoin went absolutely nuts and broke absolutely everything. I don't suspect Doge will get above this high again if Bitcoin goes up again. Stranger things have happened, but that's pretty much the pattern for a lot of these altcoins. VET destroyed. What else? You know, is it going to get above this high again? Most of this would tell you no, which would mean that my money is better off in Bitcoin, or I could buy a low that comes in something like this, and then ride it up. Maybe it comes all the way down and then only rides up to about these levels. So you only want to be buying it here and then absolutely getting the hell out of it at those points. But of course, we've got to just keep tracking the market. Don't know when this low is going to come in. Don't know when the high is going to come in, but it will start to give us signals. Nearly 2,000 online. Tonight's news was scary. Annie Rose, when you say if Bitcoin goes up again, are you talking long term or short term? No, I'm talking about the BTC value of your altcoins. It's been a major topic.
Hey, I'm Ryan Mallory, and this is my Swing Trading the Stock Market podcast. I'm here to teach you how to trade in a complex, ever-changing world of finance. Learn what it means to trade profitably and consistently, managing risk, avoiding the pitfalls of trading, and most importantly, to let those winners run wild. You can succeed at the stock market, and I'm ready to show you how. Hey everybody, this is Ryan Mallory with Swing Trading the Stock Market, and on this episode, I'm going to be answering a recent email that I got. It's great. I think it's a good question. It's short, to the point, but I feel like there's a lot to talk about and unpackage with this particular email. Now, once again, I'm not going to give away the guy's identity. His name for this episode is Hank. Hank sent me an email. Before I get into it, right now, I've got myself an old-fashioned that I make. Now, I tell you what, I don't do a lot of things good in this world. I make really good burgers, and I make really good cocktails. And I don't make like every cocktail. I make like good old-fashions. I've yet to have an old-fashioned that's better than mine. And I make pretty good margaritas. And then I have a drink that I've created for myself using a pomegranate liqueur, which is really good, by the way. That's a different episode. But anyways, this old-fashioned, I'm using Knob Creek small batch 100 proof. And I tell you what, old fashions are great, but there's a couple of key factors with the old fashions when you make these things. You've got to use a big ice cube. If you don't use a big ice cube, it's just all for waste. And I go to these restaurants and they still give you like crushed ice or like really tiny pieces of ice like it came from an ice maker. Nah, don't do that. Always got to give me like a good solid piece of ice. I mean, a nice square cube. That's about 2 inches. You got to. You do that, it makes the whole drink completely different. It's not going to dilute as fast. And then I'm pretty heavy on the bitters too. So I like putting a lot of bitters in there, orange bitters, the aromatic bitters, and then the big ice cube. Put a little bit of simple syrup in it, and then the Knob Creek. 100 proof, 50% alcohol, small batch. So that's it. That's my drink of choice while I'm doing this podcast episode tonight. Now, Hank says, Ryan, I've been listening to and enjoying your podcasts over the past few months. Man, I always like it when they start off like this because I get some crappy emails too from people. But this is always nice when people are like my podcast. And that's probably one of the things that I'm getting the most emails about is the podcast. Very informative and helpful. Thank you so much. How does one manage the risk using stop losses for swing trades against macro level events? For example, you buy a stock at $100 today and the stock moves from 98 to 102 for a few days with your stop loss set at 95. The next evening, an event occurs that negatively impacts this stock or maybe the entire market sector or industry, and the stock opens at $88 the following morning, missing the stop at $95. I know that having a hard stop is always going to be better than using a mental stop in the long run. Do you simply sell at the open market at lower prices and accept the loss as part of investing, or is there some other strategy in these cases? Regards, Hank. Now, Hank raises a really good question here because it is one of the hardest things to deal with when you say buy a stock at 100, you have your stop loss set at 95. Let's say it gets down to like $97. You're not stopped out yet. You're still in the game, but then a bad news piece comes out and it's opening up at $90 a share. Or maybe it's worse. Maybe you held through earnings and it's like at $80 a share. What do you do? Well, for one, you can't guard against macro level events that makes your stop loss irrelevant and opens way below it. You just can't do nothing about it. But the one thing I do not think that you do is you hold on hoping that it'll get right back up. Now, there's a couple of things that I like to do with my trades when this happens. For one, I never put my stop losses in as good to cancel. I always put my stop losses in after the market opens each and every day. Kind of tedious, especially if you get like 15, 20 positions in your portfolio, then you're putting in just a bazillion stop losses for the day. And that can take some time. But usually I put my stops in within the first 2 to 3 minutes of a trading session. If I don't have that many, it can be like within 30, 40 seconds. But a lot of people, if they have a stop loss at 95 and it opens at 90, what they're going to do is they're going to hope that it comes back so they can get back out at their original stop loss. That can be a very, very dangerous game because oftentimes it goes from 90, especially if it's really bad news, like if it's earnings or if it's like a major news event. Like if you go back to last year, we had the whole trade war issue with China and you were constantly having these like 40 and 50 point gap downs and you would be blowing through stops. One that did it to me recently was Boeing. Earlier this year, Boeing always has bad news coming out, it seems like, or at the time when I was trading it. I don't even trade it anymore because I hate the fact that every time I trade it, it seems like a plane falls out of the sky or you get some kind of negative news piece like they're shutting down production and the stock just gets hammered. I can't handle that. If a stock has a lot of headline risk, I'm not going to trade it because I don't want what Hank's describing here to happen to me. Now, you can't avoid it entirely. You go back to the beginning of 2019, I was in Apple. I got stopped out because they decided to, out of nowhere to guide lower on their earnings going forward. It was a 7% loss that I wasn't expecting to take. It blew way below my stop loss. It took me out of the trade. So one of the ways that you can avoid that is by simply not trading these stocks that have huge headline risk. Another industry that has a lot of headline risk is the biotechs. That's why you don't see me really trading very rarely. Like maybe I'll do Gilead, but for the most part, I won't trade an individual biotech stock, especially like a low dollar one where it's like they have one drug, it's in the FDA approval process. The entire company's existence hinges on whether or not they're going to get the approval. The approval's up in the air, whether or not they're going to get it. Yeah, I don't want that kind of risk because if I'm wrong, it's going to kill me. Now, if I'm right, yeah, I'm going to make a lot of money. But the key to trading is not about the profits. It's about the risk. That's why we call it risk management, not return management, because we're trying to manage the risk. Man, that old fashioned's good tonight. Good grief. Anyways, I could have like 3 of those, but I know that's not a good idea. But when you know that there's a lot of macro level events, and one of the perfect examples was last year with the China trade war, that's probably a time to maybe tighten the number of positions up that you're trading. Take some profits along the way so that if you do get hit with a macro level event that takes your stocks all the way past your stop loss before the market even opens, then at least then you're coming away with some profits on a portion of your position, which helps to offset the losses that you take on the rest of your position. But inevitably, you're going to get hit with a trade that takes you below your stop loss. Now, I have a do not trade list. Boeing, for instance, is on it. I just don't want to trade that stock. A lot of people are trading it right now. A lot of people like it. A lot of people think it's going to make a comeback. But the headline risk is too much for me. This thing has a news piece that's coming out almost every single day. And a lot of times they're contradicting each other. So it causes it to go way up and then way down. I don't need that in my life. But one thing that's helped me out over the years, particularly if it's a macro level event that takes me out of my stop loss when the market opens, is sometimes I'll wait like a couple of minutes into the open. Now, that's not me waiting to see whether or not I can get back to my original stop loss. Maybe I will be able to get out at my original stop loss, but that's not the intention there. Really, what I'm trying to do is that a lot of times when you see, and especially of late, you see your stock blow way past your stop loss, and this is usually more for like your mid cap and large cap stocks. You see a stock that goes way below your stop loss, and it's because of a macro level event, not anything to do with that particular stock. Oftentimes you will see some short covering at the open, and that short covering gives it like a little bit of a temporary boost. Maybe if it's like opening up at $90, you'll see it get back up to like 91, 91.50, maybe even 92, and you can shave a couple of percentage points off of it. Now, you got to be quick about it because you can't hold it for like an hour or two or for the rest of the trading day hoping that it'll come up. It's almost like an inefficiency when the market opens is that, and it's not going to happen every time. I'm not even going to say it's going to happen going forward. But for me, over the past couple of years, it's actually been a really great trick to wait for a couple minutes. That's another reason why I don't put my stop losses in until after the market opens. And then the stock rises just a little bit. You have some short covering or you have some dip buyers that are coming in to try to take advantage of the weakness. You can kind of ride that back up before it possibly takes another dip lower. Because so many times I've gotten out in those first few minutes of trading and then the rest of the day it's selling off. But that was like the only moment of the trading session that it was really seeing any kind of buying. And hey, before I get any further into this podcast, can you guys do me a huge favor? Can you guys leave a review of what you think of this podcast for me? That would be a huge favor for me because like my YouTube channel, like my website, I'm continuously trying to grow this channel, trying to grow this podcast. And I want to see it continue to expand and reach more and more people. So if you could go to the Apple podcast app and leave a review, whether you want to leave some text too, that would be great. I would be thoroughly appreciative of that. So if you can just do that, that would be great. Or if whatever platform you're listening to, if they have something that lets you leave a review, I would be very thankful towards you for doing that. But back to these stop losses, because yes, it's always good to have a hard stop loss, because if you're using a mental stop loss like Hank talked about in this email, what happens is that your stop loss is triggered and you're going to tell yourself, let's see if it really goes through that stop loss or if it's going to bounce right back up. And sometimes it does bounce back up. But a lot of times it goes right through that stop loss and keeps selling off. And the further it goes down, you're going to be like, oh, I'm just going to wait to see if it bounces up now. Oh boy, I'm really down. And now I got to wait for it to bounce back up. And so it's like this slippery slope that you get yourself into and you're just constantly waiting for it to bounce back. But maybe it doesn't bounce for like another 5 or 10%. And then you're stuck into this trade that you're taking a huge loss on. But in terms of waking up and the macro event takes you way below your stop loss, yeah, you sometimes will have that 2 to 5 minute period there where the stock will try to pop back up. It may not even be that much. It might be like 0.5%, 1%, maybe hit 2 or 3%. But more times than not, it won't even last. So you got to kind of be aggressive about taking the profits there. Another technique that some people use, and I'm not against it. I think there's more risk to doing it, is letting the price action settle in for the first 15 minutes of trading and then putting your new stop loss below the 15-minute lows of the day. Now, there's a little bit of a issue with me in that when you do that, you take on a whole lot of risk of this thing dropping another 5, 6, maybe 10 or 15%, depending on how bad the news is. And if that happens, well, yes, you're creating a new stop loss, but it might be a whole lot lower than if you would have just taken your medicine within the first couple minutes of trading. So while that can prove to be a good technique at times, and the reason why it can be a good technique is that I've seen more times than not in the first 10, 15 minutes of trading, sometimes the first 30 minutes of trading, where the stock will put in a bottom and rally back higher the rest of the day. So if that's going to happen with that particular stock, and it's a macro level event that's causing the stock to go down and not like a missed earnings or, dilution of shares or some kind of earnings warning, then yeah, you have a potential for it to put in a bottom and just rally back up the rest of the day. So that's another technique to use there as well. But overall, I like to go ahead and just wait a couple of minutes at the market open as I'm putting in my stop losses to see if that stock is going to bounce a little bit for me at the open, so I can go ahead and at least get out at a higher price than what I expected to get out at. Oh, and by the way, too, check out my YouTube channel, youtube.com/shareplanner. New feature rolled out there. It's called channel memberships. You get access to my watch lists, and you get access to some of my market analysis. And you also get access once a week to FANG updates with Facebook, Amazon, Apple, Netflix, Google, Microsoft, and Tesla. So I know Tesla's not in the FANG, nor is Microsoft, but we call it FANGM for Microsoft, but you can't really put the T on there because then it doesn't even sound right. But anyways, FANGM plus Tesla, that's one of the levels. There's 4 levels to choose from. And then you also have S&P analysis. You also get my updated watch list twice a week. So check that out, youtube.com/shareplanner. Click on the join button and choose the plan that you want. Thank you guys. If you guys have any questions, feel free to email me. I still want to get your emails. Keep sending me your emails. If I get so many of them that I have to do like 5 podcasts a week, I'll do it. I'll make a podcast out of every one of them. Doesn't mean that I won't get behind a little bit on them, but I will do it because if there's that much of a demand for me to answer your questions, I will do everything possible, and that includes doing up to 5 podcasts a week to answer them. So yeah, keep sending them my way. Great questions. This was a great question from Hank today. Thank you for sending that to me. It was a very helpful question that I know a lot of traders wonder about. So thank you for sending me that email, Hank. Thank you guys. God bless.
Thanks for listening to my podcast, Swing Trading the Stock Market. I'd like to encourage you to join me in the Share Planner Trading Block, where I navigate the stock market each day with traders from around the world. With your membership, you will get a 7-day trial and access to my trading room, including alerts via text, email, and WhatsApp. So go ahead, sign up by going to shareplanner.com/trading block. That's www.shareplanner.com